Well, welcome back, and let's go ahead and take a look at our grain market activity along with Dewey Strickler of AgWatch Market Advisors. He is based in Franklin, Kentucky, and he joins us right now. Dewey, thanks for being a part of the show here. Let's go ahead and dive into these grain market prices right off the bat and take a first look at our corn and soybean and wheat trade. Here we go with the corn. We have the March contract 2 1/4 higher. We're at 368.5. That's just one tick off our high of the day. And July now 2 1/2 higher at 384 3/4. Meanwhile, new crop December corn up 2 at 399 1/4. Well, that happens to be on the high of the opening range and within a penny of $4. How about that? On the soybean trade, let's take a look there. March now 7 higher at 1043 1/4, and we have July 7 1/2 higher at 1063 1/2 right now. On the wheat trade, we were higher overnight, and right now on Chicago March wheat, we're 6 1/4 higher at 458 1/2. That's within a penny of our high from last night. Now, July 6 higher at 485. On the Kansas City wheat market, we have the March contract now 7 1/4 higher. We're at 476 1/4, and we have July new crop 7 1/4 higher at 510. On the Minneapolis spring wheat trade, March now up a penny and a quarter at 602. July 2 higher at 625. And in the cotton market to open things up today, we have the March 20 higher, May 15 higher at 81.49, and we have the December now 26 higher at 76.86. It almost hit 77 cents early this morning. So a higher tone all across the complex here, Dewey. This morning we had an overnight sale reported of corn and soybeans. Didn't know if that was going to help much. What's the focus on this morning?
Well, it's still the same focus that we had last week. Traders are really looking at weather in Argentina and so forth. We've got a few private sources are looking for Argentina soybean production to drop below 50 million tons compared to USDA's current estimate of 54 million. That's pretty well what it's all about.
What about the weather in the southern plains here, where we have continuing dryness in the high plains region there of the southern plains? A lot of folks ready to ride off some of that wheat crop, the way it sounds.
Well, we'll be getting our ratings out here this week, and I think, of course, obviously, the dryness or continued dryness in the southern plains has kept the wheat propped up, and it will continue to do so here. Where we're really missing out in wheat is our exports. They're just they're not up to snuff to where they should be.
All right, let's talk about this corn and soybean market for a little bit. When you look out there on the deferred contracts for the new crop months, is it too early to be pulling the trigger on maybe a percentage of sales at this point?
Don't think it is. We'll probably see a top by Thursday.
Really? A top for the year, or what do you think here?
Not for the top for the year. I think what you will see, this market will top around Thursday. I think we will see anywhere between a 5 to 8, maybe 10-day, probably max 2-week correction. The market from there will go up and make probably its final seasonal high.
So do you think they're going to be really fighting for acres right up until March or April here?
Kind of looks like they will.
Okay. Dewey, we'll come back here in just a little bit, and we'll pick apart what's going on here in our livestock trade as well, and we'll try and take a look at some of the financial markets while we're talking with Dewey Strickler. He's with AgWatch Market Advisors. Don't go anywhere. We'll be right back. Well, we're talking with Dewey Strickler of AgWatch Market Advisors right now, and as we transition out of the grains, I want to check and see what some of these outside markets are doing here as well. What's the dollar value doing right now on the dollar index? I wanted to point out we had the Dow opening up about 220 points higher a little bit ago. Right now on the dollar index, it's trading just slightly higher, not moving a whole lot. We're up about 30 points on the March. We're at 89.840. June is up 30 points as well. The deferred's a little weaker. Now on the crude oil trade on West Texas Intermediate crude, let's take a look at what the April contract is doing. We're down 29 cents at 63.26 per barrel right now. And on the heating oil trade, that's how we trade our diesel fuel, you know. We have the nearby March basically flat at 196.9. We have the April flat at 197.2 per gallon. So not much change there at all. Let's take a look now at our livestock trade and see how we're opening up. We have the live cattle trade now $1.05 lower on the February at 126.95. Remember, our last trading day is coming up here on Wednesday. We have April now 70 lower at 124.15. How about feeder cattle? How are we opening up there? Well, we have the feeders on the March down 65 at 145.35, and the April 75 lower at 147.75 per hundredweight. And it's interesting to note that as you go further out in the deferred months, the losses get bigger and bigger. So it seems like there may be a little bit of like bull spreading activity there, even though everything's down. Now, if you look at the lean hog trade, on the lean hog futures, you have the April contract down 3 cents at 71.35, the May down 32 at 77.28. All right, let's go back to the cattle trade here and talk with Dewey Strickler about this. Dewey, we had the cattle and feed report last Friday. Was that really that bearish to push the cattle market down $1 this morning?
Well, I think probably it was. When you look at the numbers, as far as on feed, we're looking at 8% over a year ago. Placements were 4%. Now, the placement number was about 3 percentage points higher than what the trade was expecting. So, you know, it didn't do the market any favors. Let's just say that.
So what do you think the seasonal trends are here, Dewey? As we get into the month of March, we're going to be starting March here on Thursday, and now we're into Lent. But what happens with the purchasing patterns on the wholesale market on the beef and the pork at this time of year?
Well, usually you see a little bit of pickup because we start seeing some warming trends develop going into March. You have people pull the covers off of their grills and start cleaning them off, and therefore, you know, you kind of see a little bit of support coming to the wholesale values because of that.
Do you consider the chart to be kind of sideways right now?
I think it will be. I think we got obviously a downward slant to the cattle market here right now, and I think we're going to be looking at a broad trading range here to kind of gauge to see what our demand is going to be over the next couple of weeks as we start moving into March and into early spring.
So where are we technically on a lean hog chart if you look at that?
On the lean hog contract, I could see the hogs maybe getting a bounce on the April up to about 73, somewhere in that area there.
Would you be a seller there at that point then?
Possibly could. Kind of depends what the indicators are showing at that time.
Oh, okay. Well, thanks for spelling that out. And thanks for sharing all the information here as we get things rolling on a Monday. Dewey Strickler happens to be with AgWatch Market Advisors, and he happens to be located in Franklin, Kentucky. Always good to hear from Dewey. And Janet, I understand over the weekend that we had a couple of fatalities from stormy weather north of here on the Kentucky border. Not that far away from where Dewey is located. He said he's okay, though.
Good to hear that. Thank you very much, Marlon.